What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Monday, March 4th, 2024, and this is how we traded SPY today. So before we get going on that, if you enjoy our content, please go ahead and give us a like and a subscribe. Don't forget to turn on the notifications so you can be the first to be notified when we drop new content. Also, please leave us a comment. Share with your friends and family. That would also be greatly appreciated. So let's get to the chart. So you know what we're going to do. First thing we're going to do is we're going to look at pre-market high, 512.89. Now we're still in rarefied air, folks. We're still, we punched that all-time high again last Friday. And whenever we get into these areas, these all-time high areas, it becomes more difficult to trade because we don't have any historical context. We can't say, well, we've got a supply zone over here, or we've got a demand zone down here. We don't know what we have, so we just kind of have to. We've got demand zones down low, but what are the likelihood of going down there? Maybe it's high, maybe it's low. We don't know, but anyway, we've got this pre-market high, 512.89, just a little tick up here from early pre-market. Very early in pre-market. We got this pre-market low sitting down here at 411.66. So I'm looking at the chart thinking, okay, so 511.66 to that gives us $1 and what's that? $1.23. That's not a whole lot, And again, pre-market or all-time highs again last week. Who knows? You never know what's going to happen until you get into the trading day. Now, we started out the day over here, and guess what? We didn't have a whole lot of volume, not a whole lot. It was just kind of chopping around, bouncing around. We're going to go into something here in just a little bit. It's called the Wyckoff method, or the Wyckoff, the 4 different phases of any particular equity. And this is going to come into play just a little bit later in the day. Folks, I'm telling you right now, it was a very, very tough day to trade today. Are you going to get into calls? Are you going to get into puts? At one point, so let's look at this. So we had 512 even money sitting right down here. So 512 even money, the length of time, the amount of time that it took to get from 512 all the way up to this 512.58. Again, 58, this level. So what do you got? You got what? 46-cent move to get from here. It took forever. Forever, it's a relative term. So basically, from 39 through 10 minutes. It's not very long. But again, the candles were small. Any kind of pullbacks on a day like today hurt. Plus, you got theta. Theta is working against you the second you put on that trade. It's early in the morning, so it's easier to recover. So, nothing in here. A lot of folks just got chopped up. It's just, take it upside, downside. I was looking for pre-market high. I was looking for pre-market high all morning. So I said, you know what? We got through on this play, had a cross to the upside. I took this trade right in here. We breaches 512.46. I figured, you know what? If we can run up, I did kind of wait through this candle, came down here and kissed VWAP. That was my stop. And he closed below VWAP. I would have gotten out of the trade. Anyway, I thought, you know what? I think it's in play. I think that 512.89 is in play. So I took it out when we breached that level, actually got to that level, struggled. And then what did we do, folks? Now we had this cross right here, actually right here in the open, had this cross to the upside. Could have played it. I didn't trade it. Really not interested in playing this early in the day, realizing there wasn't a whole lot of meat on the bone, even in pre-market. Came down, took out this level down here, 512.10. Ran back up. That's kind of a big candle to take a position on, but nevertheless, I thought, you know what? We closed. We had a kind of a golden cross. So a 920 VWAP and POC cross on the same candle. And we did breach this level of old resistance, new support. 512.46, got through that 512.58. Took that out to the top side. At this point, I'm thinking, you know what? Not a whole lot of movement. The moves are really slow. They're very much plotting. PLODDING. Slow. They were slow moves, folks. Slow moves to the upside, slow moves to the downside. I decided to kind of take a flyer on this. I thought we'd be able to get back down to this level right in here again, 512.10. Now, I basically took this same play with the exception of I used my stop as this candle right down here. So we closed above. Actually, no, I didn't, because I didn't take this candle here. Took this candle. My stop would have been VWAP again. Could have taken this candle. Would have been a kind of a risky play because we're moving down at that point. Give it a couple of candles. So we breached this to the upside, took this play and rode it. Tried to get up to this 512.89 again. Guess what? It didn't get there. Small win on the play. Now, had I decided to hold that, guess what it did? It ran up and it ran up and it ran up. We had this 30-minute zone sitting down there. Actually, it was from Friday, so 513.10. 513.10 had been sitting there since Friday. It was a 30-minute. I'm not going to show you the 30-minute because that kind of gives away what happened later in the day. But take my word from it. It was a 30-minute double top from Friday at this level, 513.10. And again, slow moves could have taken this back to the upside, but I thought, you know what, these are just plotting. I didn't trust it to get through 89. I probably should have taken it up to that spot up there, but again, I didn't play it. Now, let's talk about the four different stages of the market, what every single equity goes through. So you start off in what's called an accumulation stage. So where essentially what the big boys will do, what the big banks, the hedge funds, all the big players out there, what they will do is they will accumulate, hence the accumulation, they will accumulate positions over time as to not show their hand to the market. So if they accumulate too fast, what happens is the price goes up very, very quickly, and they're not able to capture as much as they would like to capture out of the move. So these moves in here, although they look kind of big, so 512.18 up to 512.10, you got less than $1. You got 92 cents essentially from the bottom all the way to the top of this move. Is that a lot? Well, it can be. If it's a quick move, you can do very, very well in those plays. So they go through these generally fairly long periods of accumulation where they're building up their positions over time. So you can see this volume down here. And we were commenting in the group today, volume is bad, price action is bad. We don't think there's going to be any moves. If you don't want to trade today, don't trade today. And that's fine. Folks, if you don't like the chart, do not trade the chart. So again, during periods of accumulation, the big boys add to their positions over time as to not show their hand so they can move it later on in the day when they've accumulated. So they accumulate, and then they push it up with a big push, and that happens. Now, we use something called volume profile. For those of you that have seen my videos before, volume profile essentially shows where the volume has been traded. So you get the different levels. So on the 1 minute, it shows something. On the 3 minute, they all show different levels of volume depending on, well, how long it's been in that range. So the higher the time frame, the better picture you're going to have of the overall volume being traded at a specific price point and a specific time. So that's what that volume profile is really, really good for. So in periods of, like I say, the accumulation, we're going back to that word again. They're accumulating positions over time. They'll run it up, trap people in positions, run it back down to VWAP. Didn't make any of these plays in here. So I said to the group, okay, we're going to watch this 513. I'm giving away my hand right in here. We're going to watch this 513 very, very carefully. Because again, you look back to Friday, there's no volume up here. There are no at this level over in here. There are no positions being defended. So when there's nothing to be defended, it's easy for them to push the price either up or back to the downside because there's nothing to keep it down. So you can see these big volume candles in here. I said to the group, okay, at this level up here, if we are able to breach 513.15 to the upside, there's nothing holding it back. So what's it going to do? My guess was it's going to run. So the entire day we're looking at this thinking, you know what, we've got, $1.08 at this point, $1.18 from the bottom to the top, which, it's just not a lot of movement for an entire day. It's not. I made mention of a specific day. It happened last year. It was the day after Thanksgiving last year. We had a total of 76 cents worth of movement from the bottom to the top. Very, very little movement. I made the comment. I said, guys, this is kind of looking like, that day. This is the second lowest volume day, actually the lowest volume day since that day. Again, the day after Thanksgiving last year. But again, we've got all of this thin volume above 513.15, where if the big boys, through accumulation, through all of this time in here, they're buying, they're building up their positions, it wouldn't take very much to push it through back to the upside. And guess what they did? They did exactly that. They did exactly that. I wasn't in on this play. It would have been really, really nice to get in on this play. But again, I wasn't, only because I kind of thought we could push up there. But I wasn't willing to put my money on the line. I think that's what it was. I wasn't willing. I should have been, because, I saw that there was very, very no volume over here to keep it down. So what did it do? It ran and it ran and it ran and it ran. Now, we had one other level. Now, these were levels that were not on the chart, obviously, in pre-market. This was a double top up here at 514.02, double top on the 5-minute, and 513.76. So we're going to watch this level specifically, 513.76. We had one more line on the chart way up here. It was a pivot point at 514.57. Now, remember back, I don't know if I had on the chart on Thursday, but on Friday, we had a line at 514.49, which was another pivot point to the upside that we tried to get. Now, we're getting late in the day. We're getting super, super late in the day. So the reason, late in the day, it's more difficult to trade late in the day because you have so many different levels to get through from a support and resistance standpoint. But late in the day, because even though we had this push here, there's still very, very, very limited volume over in this area. Okay, there's very limited volume. Now, I had this line right here, 513.76, and I thought, you know what? That's a double bottom on the 5. So what would happen if I took puts right at this level? We had a cross to the downside. I got a signal to get in. I thought, you know what? If we can get that 513.76 to the downside, get a close, we can drop. And that's exactly what it did. Now, here's the funny thing about this story. This is an absolute rarity. Absolute rarity. At this point, I got in this position. I had a stop. I knew exactly where my stop was going to be if the trade went against me. I put in a stop, so if it hit that stop, I'm out of the trade. But to the downside, I didn't have any kind of a take profit. So I went in. I left my office, went in, changed my shirt, brushed my teeth, put some socks on, put some different shoes on, and I came back to the chart, and what had happened? Whammo! All the way down here past VWAP, took out multiple levels because, again, we didn't have enough volume to hold it up. So, again, let's go through those different stages on the Wyckoff stages. So, down low, what you have is you have accumulation. So the big boys are accumulating positions to run it up. This right here, so you can call it a run up, you can call it whatever you want to call it. It's called a markup area. So it's marking up. Now we get into this area up here. This is called distribution. So accumulation, markup, distribution, where the big boys are doing two things. Number one, they are starting to sell off their position because they figure at that point, you know what? So this area right here, that's where everybody jumps on and says, oh, this thing is running. So not only do the other big boys, financial institutions, do they jump on this moving train, but retail also jumps onto the train. And it doesn't matter what the equity is, folks. This happens to be SPY, but it can be any other equity out there. So if you're not trading SPY or SPX, whatever you're trading, the market goes through the 4 different phases. It always does, always has, always will. So they get into the distribution phase up here where, people are still buying, they're selling, buying, selling, and made a double bottom here. And then when they had enough shares, they said, you know what, we're going to start dumping them all. So they started selling, and then a selling frenzy start. So we have accumulation, markup, distribution, and markdown. So those are the 4 distinct market phases. So the market goes through all of those phases. Again, it doesn't depend on the equity. They all go through it. And you can look historically at any chart and at any time frame, you'll see the 4 different phases. So that's how she played out today. That's, I came back, I opened up my brokerage and I marketed it out, and it was a really, really, really nice play to the downside. Didn't play anything after that. Let's check out that 350 candle, see what happened on the 350 candle. Probably not a whole lot. That is right in here. So red to the downside, followed by some bouncing around and bouncing around. You do not want to be in on a candle like this. So here's what happens. Generally speaking, after a big run to the upside or the downside, I don't want to say the market is exhausted at 350, but it may be exhausted at 350 unless you have a super, super strong signal. Unless your edge presents itself at 350, stay out of the trade. There's no reason to put the money on the line unless your edge presents itself. Now, if your edge presents itself, put on the trade. But that's how she played out today, folks. I want to show you the 5 minute. Here's that 5 minutes. So you'll see all of this. And again, it was really, really, really difficult to make money in this area, folks. A lot of people got hurt because they said, okay, I'm going to get into calls, I'm going to get into puts, I'm going to get into calls. So they went back and forth and back and forth. Whereas if they just would look at the higher time frames, realize, we're in a period of accumulation or consolidation, same type thing. And here is a higher time frame. So this is the 15 minute. That's what it looks like. Now let's look at the 30 minute. You see this? We found really, really good areas of support. So it's basically rally, support, rally, support, rally, and so on and so forth. And then followed by the big drop at the end of the day. But that's how she played out today, folks. A lot of people lost money today. If you were fortunate enough to find yourself on the good end of the day, feel very, very fortunate. It was really, really tough to trade, particularly early up through, well, heck, up until an hour and a half left in the market today. It was tough sledding, folks. Matter of fact, I know a lot of people that just said, you know what, I'm not trading this anymore. And they left and they came back and said, what happened? Well, accumulation happened in, the markup stage. We didn't have anything holding this back. So there was nothing there. This right here. Let me show you this real quick. This is volume profile, folks. See this blue shaded area right here? This is what's known as the POC. This is the point at which most money has traded hands. So this area right in here, this is the 5 minute, but this is what it looks like. So you can see this area right, this is exactly what it looked like late in the day, folks. I said, if we are able to breach this to the upside, again, 513.15, she could take off. And guess what she did? Whoop, right on up. And a beautiful, beautiful, beautiful play to the upside. I think it was about $1 move, a little over $1 move in very, very little time. So this is thin volume, folks. In areas of thin volume, price can move very, very quickly through areas of thin volume. But that's how she played out today. I hope you guys did well. But above all else, I hope you guys followed your trading plan today, win, lose, or otherwise. Now remember, we are not reliant on a single trade, but rather a series of trades over time that will ultimately determine how we do in the market. So when your edge presents itself, put on the trade. No edge, no trade. Edge, trade, no edge, no trade. That's how we did it today, folks. Now, if you enjoy our videos, please go ahead and like and subscribe. And don't forget to turn on your notifications. That way, you'll be notified when we drop new content. Also, leave us a comment. We greatly appreciate that. Share with your friends. That would be awesome too. Now, if you are interested in live daily trading, so every single day from bell to bell, head on over to Trading Decoded Discord. The link for that is down below. We do live daily trading every single day. We talk about these trades all day long, folks. That's all we do in there. Now, if you're interested in 920 trading strategy, head on over to 920trading.com. All of the information is there. You don't have to spend thousands of dollars and a lot of your time on a course that, quite frankly, is available if you are just willing to look for it. Again, 920trading.com. Also, sign up for our free weekly newsletter that comes out every Saturday. So that's how we did it today. Thanks for spending a little bit of time with us. We know that your time is valuable, but thank you for spending time with us. We hope that you find value in the videos that we're doing every day. We appreciate you all very much. I hope you all have a great rest of the day, and we will see you in the markets.